Hello everybody, I'm John. This is JP Strategic Investments, and today I want to talk about NFLX stock and specifically why I think NFLX stock could see a big drop after their next earnings report, which comes out in about a week here. Now, the main thing the first thing that I want to show you guys here is their last earnings report and what their stock did. So if we take a look at the chart here, we can see the NFLX stock was about $550 or so, and it dropped all the way down to almost $500 a share. So that right there is about a 10% drop, but even further after that, in the next few weeks or so, it dropped all the way down to $480. So that's about maybe a 15% or so drop there. Pretty significant. But the interesting thing here is the stock has climbed almost all the way back to where it was. It's sitting just above the 450 level there. So pretty much almost back to that that 550 level. Now, the interesting thing about that is really not a lot has changed with NFLX's stock, other than the fact that they're promising some new content that's coming out. And granted, it's probably going to be some pretty good content, but the thing is in their last guidance, if we look at their last earnings report here, in that quarter, in the first quarter, they were projected to gain about 6 million subscribers. They only gained 4 million. And then the big thing here was right here in Q2 of 2021, which will be the earnings report that comes out next week. They only expect to gain about 1 million new subscribers. Now, that's a pretty significant drop, especially when we take into account the fact that last year they did 10 million subscribers in the second quarter. Now, I will say, in the last year, in 2020, we had some pretty crazy numbers with NFLX. Obviously, the pandemic was happening, we had lockdowns, and a lot of people signed up and NFLX did very well. So it's not quite fair to compare them to that 10 million number. But still, if we look at the last quarter, 4 million when they were expected to do 6 million, and now they're dropping that down to 1 million. Now, the thing is this caused the stock to, again, drop all the way down to the 500 level and even further down after that. Just because we have some new content coming out, which most of that content isn't even scheduled to come out until late 2021 to early 2022, that's really not going to bring in a whole lot of new subscribers, at least in the short term. So if we're looking at the subscribers that are going to be coming in the next quarter, if we look at their guidance there, 1 million, in my opinion, even that seems a little ambitious. And just some things to keep in mind, some evidence to kind of further add on to that. NFLX, at least as far as I know now, other than some bundles and things like that, is essentially the most expensive streaming service out there. If we look at their standard plan, it's $13.99. They do have a basic that's $8.99 or $9, but that doesn't even include HD video. So you have to watch it in standard definition. Pretty much everyone now wants to watch it in HD. If you have an HD TV, but NFLX is only allowing you to watch in standard definition, really not the greatest. So the main plan, and the plan that's the most popular right now, is the $14 plan. If we look at basically every other major streaming service out there, it's significantly cheaper. Amazon Prime, for example, or Prime Video, you could essentially look at Amazon Prime or Prime Video as free because pretty much everybody has Amazon. I mean, not everybody has Amazon, but most people have Amazon. And so the fact that you get to watch Prime Video, I have Amazon Prime, right? I watch Prime Video. It doesn't cost me any extra than what I already pay for Amazon Prime. And so essentially Prime Video is almost free to anyone that already has Amazon Prime. So that's really hard to compete with paying an extra $14 a month. Disney Plus, just Disney Plus is only $8 a month, okay? So that right there, almost half of what the standard plan costs for NFLX. And not even that, you can get the Disney bundle, which is Hulu, Disney, and ESPN Plus for the same price, $13.99, as you get for just the standard plan with NFLX. So, I mean, that right there, the cost comparison, pretty huge difference there. Not to mention there's Discovery Plus that's very cheap. There's all these other ones that are coming out. You have Peacock, you have Paramount Plus. Basically, everybody's coming out with their own streaming service now. And granted, they may not be as kind of all-inclusive as Netflix is and have maybe the same amount of content as Netflix does. But, especially when you consider Disney Plus and Amazon Prime, those two, or Prime Video, those two are pretty close to what Netflix has. And really now the only thing that Netflix has going for it is the fact that Netflix has no ads. And, that's not something to take lightly. A lot of people would pay a little bit extra. In fact, a lot of people do pay a little bit extra at some of these other streaming services to get no ads. That's something that people do want. The question is, though, are people willing to pay that much more just for no ads, especially when Netflix now has been losing a bunch of content to a lot of these other streaming services? I mean, Netflix is slowly losing pretty much all of their Disney content. They've lost most of the big content already from them. They've lost a lot of their kind of big name shows like The Office to other streaming services. And so the value proposition for Netflix with these no ads at $14 a month, even at the $9 a month, is becoming less and less attractive. So that's why I don't think we're going to see some very impressive earnings from Netflix, and in fact we could see some pretty bad earnings from Netflix, especially when you add on the fact that all of these shows that are now restarting production and that are going to be coming out in late 2021 and 2022, a lot of those costs are now coming back up. One of the reasons that Netflix has been able to keep profits up is because costs have come way down. Well, if costs start to rise because they're revamping these shows or restarting them after all of the shutdown from COVID, but they're not getting the influx of subscribers that they are because these shows aren't coming out till later, we could have a perfect storm here where all of a sudden a ton of costs start to increase, we have these subscribers come down, and we have a really bad earnings report. Now, not to say we could have a decent earnings report where maybe those shows do bring in some subscribers in Q3, Q4, maybe Q1 of 2022, but this earnings might not be that great. And so that's why personally, I don't think we're going to see some good earnings, and I think we could see a significant drop, pretty much back down to that $500 level that the stock was down to in the prior earnings. So let me know if you agree with me, disagree with me, if you have any other thoughts on Netflix stock and their earnings. Other than that, I will see you guys next time, and have a great day.